South Florida has long sold itself as the land of sunshine dreams. Miles of golden beaches, palm-lined neighborhoods, and booming real estate promised both paradise and profit. For years, the region's housing market felt unstoppable, attracting waves of buyers from across the United States and beyond. Investors poured in cash, families uprooted their lives for the promise of better weather and opportunity, and home values soared to dizzying heights. But in 2025, that dream has cracked. The once red-hot housing market is now in a months-long slump. Prices have fallen for 5 straight months. The median home price has slipped well below last year's peak of $423,000. And in May, the total sales volume across Miami-Dade, Broward, and Palm Beach counties plunged to $5.6 billion. $500 million less than just 1 month earlier. What was once Florida's crown jewel of economic growth is now fueling anxiety and sleepless nights. The panic is palpable. Families who bought at the peak whisper about being underwater on their mortgages. Realtors who once juggled bidding wars now complain of listings sitting stale for weeks. And longtime residents, those who believed South Florida's property values would never falter, are watching equity drain from their homes in real time. This crash didn't appear out of nowhere. Between 2015 and 2022, South Florida's housing market exploded, with home values climbing more than 70%. The pandemic poured gasoline on the fire, attracting wealthy buyers fleeing high-tax states and remote workers chasing the Florida lifestyle. For a moment, it felt like a perfect boom. Now, the question is whether this sudden reversal is a natural correction, or the start of a financial storm that could rival 2008. To understand the panic gripping South Florida today, we need to step back and trace how this market became one of the hottest in the nation. The seeds of today's crisis were planted during the frenzied growth years of 2015 through 2022. In that span, Florida wasn't just booming, it was exploding. Thousands of new residents poured in every month, driven by a mix of factors: lower taxes compared to northern states, the appeal of year-round sunshine, and the rise of remote work, which allowed people to ditch expensive metros like New York, Chicago, and San Francisco. South Florida became a magnet for both retirees and young professionals looking for lifestyle upgrades. Developers rushed to keep up with the demand, building luxury condos along the coastline and sprawling suburban communities inland. Median home prices surged year after year, in some cases doubling within the decade. According to real estate trackers, Miami's median home price jumped by more than 80% between 2015 and 2022, while cities like Fort Lauderdale and West Palm Beach weren't far behind. Investors added fuel to the fire. Private equity firms, international buyers, and corporate landlords bought up single-family homes and condos in bulk, often outbidding local families with all-cash offers. This transformed large parts of the market into an investor's playground. For ordinary Floridians, homeownership started to feel less like an American dream and more like an impossible lottery. Then came the pandemic years, which acted like gasoline on the fire. Lockdowns in crowded urban centers made Florida more desirable than ever, especially as restrictions in the state remained looser than in much of the country. Remote workers flooded in, looking for bigger houses with home offices and backyards. Demand skyrocketed, but supply couldn't keep up. Bidding wars became the norm, homes sold within days of being listed, and sellers could name their price, often tens of thousands above asking. By 2022, the Florida real estate story was one of unshakable growth. Analysts called it bulletproof, and glossy brochures promised limitless upside. But underneath the glossy exterior, cracks were already forming. Affordability was collapsing, wages weren't keeping pace with housing costs, and property insurance premiums were quietly spiraling upward. The stage was set for trouble, even if almost no one wanted to admit it. By late 2023, the cracks that had been forming beneath the glossy surface began to widen. Mortgage rates climbed sharply, cooling the frenzy of all-cash offers and easy borrowing. Suddenly, homes that once sparked bidding wars were sitting on the market for weeks or even months. In Miami-Dade, inventories that had been razor-thin began to rise, signaling that sellers were struggling to offload properties at sky-high prices. Fort Lauderdale saw a surge of price reductions, with sellers cutting tens of thousands off initial listings to attract buyers. For the first time in years, the balance of power began shifting. away from sellers and back toward buyers who were growing cautious about overpaying. National headlines that once celebrated Florida as a safe haven for investors began sounding more skeptical. Analysts warned of an overheated market, pointing to affordability levels that had fallen to some of the worst in the country. In many parts of South Florida, local wages could no longer support the average mortgage payment, especially when combined with skyrocketing insurance and property taxes. By 2024, whispers of a slowdown had become impossible to ignore. Pending sales dropped, new construction started to stall, and foreclosures began creeping upward in counties like Broward and Palm Beach. What had been marketed as a bulletproof paradise was beginning to feel like a bubble losing air. By the start of 2025, the slowdown that began in whispers had grown into a roar. What had once been touted as Florida's unshakable market was unraveling in real time. Across South Florida, the headlines spoke of panic, not profit. Homes that just 2 years earlier sold within days at record highs now lingered on the market, unsold, with price tags slashed again and again. The numbers told the story of decline. In Miami, prices had dipped nearly 5% year over year, while Tampa's drop was even steeper, over 6%. Cape Coral, once the darling of the pandemic boom, was hit the hardest. Values tumbled by more than 11% in just 2 years, leaving thousands of homeowners underwater on their mortgages. Nearly half of listings in the area were marked down, a stark reversal from the days of bidding wars and all-cash offers. And it wasn't just about prices. The entire rhythm of the market had shifted. By mid-2025, Florida homes were taking weeks, sometimes months, to sell. Inventory ballooned by over 9%, giving buyers options they hadn't seen in years, while sellers grew desperate. Redfin reported that nearly 1 in 7 pending home sales fell through in May, one of the highest cancellation rates since 2017. What used to be a feeding frenzy now felt like a ghost town of broken deals and nervous buyers. The condo market faced its own nightmare. After the Surfside tragedy, Florida's new Building Safety Act forced older high-rises into costly repairs. Suddenly, thousands of buildings were slapped with special assessments running into the tens of thousands, some over $100,000 per unit. Lenders blacklisted more than 1,400 condos from financing altogether, freezing sales and trapping owners who could no longer sell without massive losses. Then there was the insurance crisis. Premiums that had already doubled or tripled in the last 5 years continued their climb, with the average Floridian now paying nearly $6,000 a year just to insure their home. For many, that bill rivaled their mortgage. Retirees on fixed incomes found themselves squeezed. Young families started looking out of state, and entire neighborhoods in coastal areas like Fort Myers and Punta Gorda saw for sale signs multiplying as residents fled the crushing costs of climate risk. By summer, the fear became palpable. Local news stations aired footage of half-empty open houses, frustrated sellers slashing prices in real time, and community meetings filled with anxious homeowners demanding answers. South Florida, once the model of sun-drenched growth, was now a case study in what happens when a housing dream collides with economic reality. The fear wasn't just abstract, it was lived every single day by residents caught in the middle of the unraveling. In Broward County, Maria Lopez, a nurse who bought her first home in 2022, found herself staring at a mortgage balance of $420,000 on a house, now valued at just $360,000. "I feel trapped," she told a local station. "If I sell, I lose everything. If I stay, I can't afford the insurance and taxes." Her story echoed across living rooms and neighborhood association meetings, where people quietly admitted they were underwater but too ashamed to say it publicly. For retirees, the crisis hit in a different way. Many had budgeted their golden years around predictable costs, a mortgage paid off, savings for healthcare, and a modest cushion. But when insurance bills surged past $6,000 a year, with some even topping $10,000 near the coast, their financial planning unraveled. Some cut back on groceries or medical expenses just to keep their homes insured, while others began selling and moving inland, away from the beach towns they once considered their forever paradise. Renters weren't spared either. Landlords, facing the same tidal wave of costs, passed them on in the form of steep rent hikes. In Miami and Fort Lauderdale, average rents jumped 15% in a year, even as property values slid. "It doesn't make sense," said Kevin, a 29-year-old tech worker renting in West Palm Beach. "The value of the building is down, but my rent is higher than ever." For younger residents, it felt like a no-win situation. They couldn't afford to buy, but renting offered no stability either. Small businesses tied to the housing boom began feeling the sting too. Contractors reported dwindling projects as new construction slowed. Real estate agents, once overwhelmed by bidding wars, now spent months trying to coax reluctant buyers. A Fort Lauderdale staging company owner admitted her calendar had gone from fully booked to half empty. "If the homes aren't selling, nobody needs us to make them pretty anymore." The ripple was spreading beyond homeowners to the backbone of the local economy. By late 2025, the sense of unease had hardened into something more severe: distrust. Residents questioned whether state leaders had ignored warning signs about insurance and affordability, whether developers had overbuilt luxury towers at the expense of livable communities, and whether the dream of South Florida was just a marketing mirage all along. Everyone wants to know the same thing: is South Florida just going through a temporary slowdown, or are we watching the first cracks of a housing bubble about to burst? Economists and real estate insiders are divided, but their insights show where the market might be heading. Some experts are already waving red flags, pointing out that home prices have climbed far faster than local incomes for years, and that imbalance always comes back to bite. When affordability slips out of reach for the average family, the market doesn't keep climbing. It either freezes or corrects. For many analysts, the slump in sales we're seeing now feels like the first stage of that correction. Mortgage rates are another big pressure point. With 30-year fixed loans hovering around 7%, buyers are stretched thin. Lawrence Yun, chief economist for the National Association of Realtors, has warned that unless interest rates fall meaningfully, many buyers, especially first-timers, will stay on the sidelines. Still, not everyone is convinced the sky is falling. Florida continues to draw newcomers every day: retirees escaping harsh winters, remote workers seeking lifestyle upgrades, and investors still betting on long-term growth. Unlike the 2008 crash, most homeowners today are sitting comfortably on low, fixed mortgage rates, which makes them less likely to dump their homes in distress. Brad O'Connor from Florida Realtors has emphasized that while the market is cooling, it's not plunging into chaos. Looking forward, predictions remain split. Some envision a soft landing, slower price growth, more inventory, and a healthier balance between buyers and sellers. Others warn that if job growth stumbles or insurance costs keep skyrocketing, South Florida could face a sharper correction than anyone expects. What nearly everyone agrees on is this: the era of non-stop bidding wars and easy money is over. The next stretch of the market will separate those who planned wisely from those who stretched themselves too thin. South Florida's housing story isn't just about numbers, it's about the people living through it. You can feel the change on the ground. Sellers who once held all the power now find themselves cutting prices just to get someone in the door. Families who moved down during the pandemic, convinced they were buying into a forever boom, are realizing they may have overpaid. The sense of urgency that defined the last decade has vanished, replaced by hesitation. Take Miami's condo towers as an example. What once symbolized glamour and growth has turned into a financial headache for thousands. The Building Safety Act, designed to prevent another Surfside tragedy, has forced buildings into expensive repairs. Special assessments of $50,000, $80,000, even $120,000 per unit are not unheard of. And for many owners, those bills are unpayable. Condo associations are divided, lawsuits are piling up, and realtors whisper about towers sitting half-empty. With over 1,400 condo complexes blacklisted from financing, the market has hit a freeze. Buyers don't want the risk, and banks don't want the exposure. It's a stalemate that could last years. Insurance only adds fuel to the fire. Florida has become the most expensive state in the nation for homeowners insurance. Premiums of $5,000 to $6,000 per year are now normal, even for modest homes. Some policies have jumped 40% in a single renewal cycle. Retirees who thought they could settle comfortably in the Sunshine State are suddenly doing the math and wondering if their dream is still sustainable. Young families, too, are eyeing Georgia, Texas, or the Carolinas, where their money stretches further. Entire neighborhoods in coastal cities are seeing for-sale signs sprout like weeds. The climate risk is no longer theoretical, it's financial. But it's not just insurance and assessments. The broader economy is shifting. Mortgage rates hovering near 7% mean fewer buyers can qualify, and those who can are cautious. Deals collapse in the final stages because buyers get cold feet, or banks demand more down payment. In May 2025 alone, nearly 15% of contracts fell apart before closing, one of the highest cancellation rates in years. Open houses, once swamped with eager crowds, now see only a handful of visitors. Sellers are chasing a moving target downward, trimming tens of thousands off asking prices. Investors, who once poured billions into South Florida real estate, are reassessing their bets. Hedge funds and institutional landlords that bought up swaths of homes during the pandemic are now slowing purchases. Some are even liquidating, taking smaller profits while they can. Airbnbs and short-term rentals, once gold mines, are struggling with oversupply. In Miami Beach and Fort Lauderdale, entire blocks of condos sit empty during the off-season, while owners complain of declining bookings and rising HOA fees. The idea of South Florida as an investor's paradise suddenly looks shaky. Yet the story isn't entirely doom and gloom. People are still moving to Florida. Migration from the Northeast and Midwest hasn't stopped, even if it's slowed. Lifestyle still sells, and no other state offers the same mix of weather, culture, and tax advantages. That demand could keep the floor from falling out completely. Economists call it a soft landing scenario. Prices stop their freefall, stabilize, and grow slowly in line with incomes. The danger, however, is that the fundamentals are already stretched. Wage growth in Florida has lagged far behind home price appreciation. The average Floridian household simply can't afford the median home without devoting an unsustainable chunk of income to housing costs. If job markets tighten or interest rates climb higher, the fragile balance could break, pushing prices down further. Local governments are also caught in the storm. Property taxes depend on inflated home values, and as prices correct, municipal budgets could feel the squeeze. Cities that expanded services during the boom may find themselves short of funds during the bust. Infrastructure projects could slow, public services could be cut, and frustration could rise among residents already facing higher living costs. Looking ahead, experts see two main paths. In the optimistic scenario, Florida's appeal keeps drawing enough new residents to offset the slowdown, allowing prices to level off instead of collapsing. Builders scale back construction, which keeps supply from exploding, and eventually lower interest rates bring buyers back into the fold. In the pessimistic scenario, the bubble bursts harder. Rising insurance, unaffordable special assessments, and economic uncertainty force a wave of selling. That, combined with cautious lenders and retreating investors, could trigger a deeper downturn. For everyday Floridians, the uncertainty is what stings most. Home ownership has always been wrapped up in the American dream, and in Florida, it was sold as paradise. Now, thousands of families sit in living rooms filled with doubt, wondering if their biggest investment is a sinking ship or just weathering a storm. The golden beaches and sunshine remain, but the confidence that once fueled Florida's housing market has dimmed. And so the question hangs heavy in the air. Is this simply a painful correction or the start of something much bigger? As South Florida stands at a crossroads in 2025, the answer will shape not just the future of its housing market, but the fate of communities, families, and the vision of paradise itself.